You send me B500s. Okay, so B500, I noticed you had a peak on top here, and you had marked this as your order block. So when marking order blocks, there is variations in terms of which order block to use. So normally where price is just pushing up and you get a clean bearish candle before the push up, that will be the cleanest order block to use. So in this example though, do you notice that before these two candles, we had this candle here? So for me, I would use this as my order block now, right? That will be an order block. This also qualifies as an order block. This, the one which you had marked, also qualifies as an order block. But what I want you to know is, or to notice is, on the 4-hour time frame, only use these order blocks if you're going to have your entry on the 4-hour, because this takes time to play out. For price to retrace back up here, it took 4, 8, 12 hours. So unless you're using them as a point of interest, then that's still fine. But what I would advise is, if you've got price pushing up, rather use this as your order block, because after this break, you can see we had this nice retest and price then fell. So if you're looking for a sell, I think the one you were referring to was this one now, is the retest. So yes, this is a retest of the order block, which is this one. But do you notice that they now came to this particular order block to retest it? So if you're looking for entry, you're not looking for the entry here. You're looking for the entry right in this spot here. So if you see this first candle close within your zone, what you're looking for now is drop to a smaller time frame, look for a reversal candle. So this was yesterday. Price came into the zone. This was the first sign of a reversal, and this was the order block. But if you notice, the high was extended. Price created a fresh order block here. So if you use 4-hour as a point of interest, you can just drop down to the smaller time frame to get a better entry. So within this zone, you can see this was now the order block right there, which is this candle here. And we've got a peak here, which was almost broken here. So now we've got equal highs. We've got an M pattern and price broke here. So this is your entry right here. So if you don't catch it, the next entry would be here, which is today. You don't. So on 4-hour, the time you asked me, I think price was somewhere here. That's already late in terms of day trading. Yes, you can still jump into a trade, but remember now price can still retrace and price can still take you out. So if you mark a zone from a higher time frame, you still want to drop down to H1 to wait for the reversal pattern, and you still want to drop down even to M15 to wait for a pattern which you can use. So if you drop down to M15 again on the same area, you can see the same peak, more or less the same order block, which was initially respected, then broken at this point, then retested the first time. This was the second retest. So if you're looking for a sell today, we're still using this H4 zone as a point of interest. We're still using this H1 order block as a point of interest. If you are doubting these, then you simply have to wait for price to break this order block now. So this is your peak for today, or your highest high for the day. This is your order block, and your sell was going to be here. So your take profit was going to be here as well, right on these lows, or maybe target these lows here. Sometimes price will come to retest, yes, but I prefer retests which happen like within a short space of time. So if they drop and retest, that's still fine. But at the same time, they can still retest now. So that's how you could have traded this if you wanted to sell it. But personally, I don't look for sells on the booms. I only look for buys. So I hope this explanation was clear. You determined your peak from the 4-hour. You determined an order block, a broken zone. So if you're looking to trade it today, there is your point of interest. you could have entered your trade a bit earlier. So right now, price is already moved in terms of day trading. 4 hour, the move hasn't really expanded, but price can potentially come down here. They can potentially get into this demand here. So as long as we've got a point of interest, now what we wait for is an impulsive move. Then we run a fib for a possible retracement. If you're going to run your fib on H4, H4 might get confusing for day trading if you want to run your fib here, because yes, the retracement is there, the confluences are there, but where do you enter now? If you have a small account, you cannot hold this loss. If you, let's say you enter here, you want to hold a stop loss outside the range. That's why I advise to use the 4 hour just to get a feel of where the market is going. Then go to a smaller time frame to actually get your pattern and your setup. Of course, the patterns are the same, but it's now a matter of risk to reward and your patience to hold through the whole setup as it plays out. So I hope that was clear. B5, I had removed it from my watch list, so just added it for this explanation. So for now, I feel they could be bearish. I'll only be looking for possible buys here. At the same time, there will be short term as a retracement to this move, which I feel can potentially happen. So that's my view. I don't know if you've got a question there. That's B5. Then you also sent me J10. Let me see how you were looking at it. Okay, on J10. Okay, still loading. Okay, J10, J10, J10. Oh, I just noticed you had ran a fib. Oh yeah, I noticed you ran a fib on H4 on B5, just like what I did. There's nothing wrong with that. Running a fib, nothing wrong with that. But again, one thing I want to specify, from this high to this low, this is a level on its own. So if you were to run a fib, I would love to run it from here to here so that you get this entry. Then you run it from here to here so that you can get this entry. So I noticed you had run it from the top to this low here. Remember, there's a level here. So rather run it from here to get an accurate view of things. So if you are to run it from here to here again, what you notice is when price go to our point of interest, which is the 50 and the 61, we didn't get any bearish candle here. Price was gradually slowing down, but we didn't get any bearish candle until price reached this supply zone or this order block here. That's when they gave a pin bar. Then they started pushing down. So just rather use the 4 hour to just have a direction. So if you run your fib, you feel like you're going to go down, you can still remove it, then go down and use it on smaller time frames to get a better entry. So if you're on a smaller time frame now, this is after the retest. So if you had run it from this high here, why are we not using these highs? Because this high created a level here. This is the peak which broke this high. So we look using this high and this low here. This is our retracement. Price retraces now into the 61.8. So you see now when you're on a smaller time frame, it's a bit easier to use instead of having like a fib running on a higher time frame. You sort of get confused in terms of entries. So running it on a higher time frame is to just get buyers, then you remove it. Then come back to H1. I usually love to put it on H1 or M30, M15 sometimes, depending with what I'll be seeing price doing. That is the best way you can approach this particular asset. So right now, it looks like they're creating another impulsive move. So we'll have to wait still until price starts to retrace. So we have to wait. Let me just check if we do it like this. If we put it back here, usually with the system I use or the strategy I use, price at least gets to TP1. If I run a fib, I usually like to scale out here at the 0.0, and this is usually the target. At this point, you then anticipate a retracement. So if we are to get a retracement, then I would love to run a fib again from this new high and a new low, depending wherever they would have created the new low. Then after that, we can look for price to come to our points of interest, then see if they are giving us a candle showing us that they are continuing in the direction which we are taking. So I hope that explains most of the things you were asking. J10. Let me see what you sent me on J10. Okay, J10, you were on the 4 hour. And on the 4 hour, you mentioned, okay, there's a lot of markings here. Let me just remove some. Um, okay, it's a bit cleaner now. So J10, you had mentioned that price is not breaking a certain zone. That zone from my side would be this area here. Just to get the exact price, let's use 5 here. Okay. So this is the way I'm looking at it. So price was pushing up aggressively. I think we spoke about this setup from last week. They really pushed up aggressively here. The pullback happened and they came into this order block or into this demand. They pushed up, they broke a high, meaning they left this zone now as a demand. So that whole area you drew in the morning, there's nothing wrong with it. It's a whole zone where price can potentially bounce off and buy. Just to get a view of the higher time frame, I just want to check the weekly candles, see where price is going. So price can potentially get to this zone. I think we also spoke about this. But at the same time, this particular candle is usually used to take out liquidity. You see this spike here. So could be used to take out liquidity here or here. Let's just confirm if it did exactly that. Okay, if you notice from this high here, that price came and took out liquidity there, then it pushed down. So this price can play out either way. It can go up to this zone or it can retrace back to the moving average before the price continues up. So those are two setups which can potentially happen. Going to the daily, daily is about the 13 EMA, which gives us a bullish bias. 4 hour has hit a demand zone, which was right here. But you can see the price is not yet too, it's not so clean. These candles here, I'm not happy with them. But either way, the zone is being respected. And it looks like this is a pattern which could see price push up. So potentially price could go up. But when you go back to the H1, that's where you see the range I was talking about. Price is still going sideways. We really haven't set a trend. So from this particular range, you see that we broke out on the bottom side. Remember, this is our H4 demand zone, right? This area and this area. So until we break below this whole zone, we cannot sell, right? However, we can buy because there's still room to go to the top side. Even though the buy is not yet too solid now, we can potentially look for buy. So where can we potentially buy? If you look at this price action, I would love to see price get outside yesterday's range. So this is yesterday's high. This is yesterday's low. So what might happen is price might tap here and still push down, or they could push down and tap here and still push up. So this will be a better setup because we know that this is a 4 hour demand zone, or it's also a support zone. So price can come and bounce here, push up. Here, we don't have a guarantee that this buy still wants to push up. Like I said, they might hit yesterday's high, take liquidity, then push the price down. So right now, for now, I do not have any setup or anything too solid until I see price break outside yesterday's range, then get any other confluence which might be showing me that this price wants to come up. TDI from about here, we're trading half and half on the 50 level, which also means that this price can actually continue in a range and not really trend. So I'd love to wait. Maybe I'll wait the whole day today just to see how price is actually delivered before I decide to take a trade. So I also hope this one is clear. Let me see what view you had actually. I'm not sure if we are looking for buys. If we are looking for buys, then there's nothing wrong with the buy. We just need more confluence. Either price will retrace, do a stop at here, come back into this level, then we get a fresh pattern here and we can buy. Or price will actually break here, give a retest, then we can still buy. Or price will give an impulsive move, then we can run a fib here and wait for a retracement, then we can buy. That's how I would actually approach J10. But for now, again, I do not have any trade. So for today, J10, I don't have anything. B5, I do not have anything. Going to C5. C5, remember we're looking at short-term sales yesterday. I think we spoke about it during our lesson. So looking at it today, okay, let's just explain yesterday's setup. So yesterday you noticed that we were in a sell, I think from somewhere in here, but we caught a nice sell, I remember. Then price retraced. We're looking at a potential continuation here, but we also mentioned this could be a retracement for a continuation up. So any sell we were having was short term. And if you notice, price then held the 50 EMA here and it continued pushing up. So what do we have today? Today I've got this high and I've got this order block here. So what I'm looking for now is earlier I actually missed a sell because if you notice, this was my peak. This was my order block. Price broke and retested nicely. We are below the 13 EMA, which makes this setup high probability. So it was a nice sell, short term though. I think it actually played out almost 50 pips if I'm not mistaken. So right now, price slowly trickled up. Two things can happen. They can actually respect the order block as a second retest and actually melt to the downside. And I would only consider sells if price creates a new peak wherever they will respect. Then I have to locate order block. Then I'll sell below that order block. That's how I'm viewing it. So again, we know that we're still bullish if you look at it from the weekly. Price is potentially pushing up to the 50 EMA, but at the same time, price is within a zone. But this is a weekly chart, so this zone is too big. It's a supply zone sells, right? But with how prices were moving, I feel like we're bullish. So any sell we take now, I don't think it will be high probability until the trend becomes a selling trend. So for now, it's bullish. All sells are short term. We can still potentially get a sell. But if we do get it, for now, it's short term until price breaks a certain level, which will make it maybe a high probability sell or actually a reversal for more sales to actually happen. So for now, that's my point of interest. I'm just going to leave it here. If I'm to run a fib on this level here, you see that price is actually almost on the 61.8 retracement level, which is right on our order block. So if we get a reversal candle here, I need a real confirmation. I need a bearish candle first to show me that we actually want to come down. Then I will locate an order block either on M15 or M5. Then I'll consider a sell. If we also come below the 13 EMA, I'll consider another sell. then we'll just see how price plays out. So at the same time, if this price is pushing up, we're also saying this is the low, this is the high. So if price doesn't retrace, they already retraced into the 50 level. So this price can still continue being bullish. So if this zone doesn't hold, it just means this price will maintain the bullish move which it has. So those are the two views I have on C5. If the zone holds, I'm going to sell. So I'll leave it on H1 so that I can see the candlestick, which will come potentially either this current hour or the next hour. So that's my view today for C5. Nothing too solid yet, still low probability here. Then going to C3. C3 went wild on Saturday. It had set a nice peak here. This is a good example just to show you how price moves, right? So we had a nice push down and we had a retracement. And we also had a baseline bounce right on the retracement. We had a hanging man. Everything lined up here for a high probability sell. Price sold back to this low. And I was looking forward for a continuation, right? But this is what price does. Or this is what price did. They decided to come back above the 13 EMA. So remember on the other lesson when I told you, if you're struggling with the trend, just open H1 and see how your price is behaving in relation with the 13 EMA, which is a dynamic support and resistance, right? So here they came back up and you can see they started throwing solid green candles. So for some reason, the trend became bullish. They came and took out this high. Took it out here, extended here, check this order block wasn't broken, right? So that means this second leg wasn't valid for itself. Price continued to extend that high here. Then after that, the order block was broken here and retested. That's when you can only sell. Also, take note, we are now trading below the 13 EMA. That shows you that if you're in a sell or if you sell here at the break of the order block, your setup is high probability. Anything you take here will be low probability if you're selling because you're on the other side of the trend or you're trading without a confirmation. So from yesterday, huge explosive move down. The retracements have been so small. So what could potentially happen today? So I'll jump to the weekly chart again. Zoom in to see the candles. Right, so it's a fresh week. The week on the candle has been created. Price can potentially come down here, or price can come to the 13 EMA. So again, C5, the trend is not really solid to show that it's actually bearish. It can actually go either way. So let's see if we can get a better view from the daily. Daily is promising a sell because you can see price slowed down here. Nice doji. Took out liquidity. Rejected a zone. I think this could actually be this zone. You see, from the daily, we've got this peak here, and we've got an order block there, and we've got an order block there. So price tapped into this one. So if this is your order block, you want to be in a smaller time frame right on this area to catch a sell. So that would have been yesterday, right? On yesterday's day close. So C3 was going to be a good sell for yesterday because they were in our zone on a higher time frame. Then we dropped down smaller time frame to look for a pattern. Could we have run a fib to get an entry? I doubt that very much because the retracements are very short, as you can see. Even if we had, maybe if we had used, let me go to M30 and see. Maybe if we had used this zone, but I feel like it's just the same. The retracements are not really that big. So there was no clear entry here unless you were paying attention maybe to this zone here. So remember, once you get your buyers, then you have to look for reasons to actually confirm that your bias is correct. So unless you were paying attention to this zone, which was then broken here and retested, you could have taken the trade. But do you notice that we've got a baseline bounce on the highest high of the day, or the HOD on M30? So this would have been a nice sell at the top here. Order block there, nice sell again in here, nice sell again there. By the time you get these confirmations, you could have been in this trade already. So looking at it today now, today is different from yesterday, because yesterday was a high probability because it was a rejection from the zone. Today now, we didn't get any nice retracement. So for me, I don't have anything solid for now, because again, based on the weekly, price can go either way. What I can potentially use would be this level here. My reasoning is price dropped, pulled up, then broke, but didn't retest. Then from here, we've got a minor zone here, which has already been retested, but I'd rather stick with this one for now and see what happens. If there's momentum in the market, price might continue dropping without giving us an entry, which is still fine because our entry criteria won't or wouldn't have been met. So there's nothing wrong with missing a trade. If it doesn't get to your point of interest, just let it go. Where can they potentially drop to? I've got this week on this H1, so it's a point of there's liquidity there, so price can potentially be coming here. So if we can get a retracement, I would still love to take shorts. I would still love to see price interact maybe with the baseline somewhere at some point. I would also love to see price interact with the 50 EMA since we've got a 1350 cross here. Those will be my entry criteria. Apart from that, I cannot trade C300. Then going to C1. C1 has been moving nicely. We explained this, we explained this, we explained this in yesterday's lesson. Then what happened yesterday is from this impulsive push, price retrace into the 38, into the 50. Then they started going sideways with no clean price action there. So for some moment, they got a bit choppy. So during the day, I didn't get any entry. I only noticed today that eventually they moved 3 hours prior to the day closing. They eventually moved and yeah, the trade played out, but I was not in this trade. So today, do I have any setup here? Let's see. Looking at the weekly, I've seen price action like this before. And usually after this type of candlestick, especially if it has taken liquidity here, price usually retraces. So for now, I wouldn't want to be on the sell side unless it's very short term. You can also see after this very huge bearish day, we had this candle. I keep forgetting the name. It's a pin bar, but where it's being created, it's not rejecting a moving average. It's different from this one. So I cannot treat it the same because it's happening on a different position. So now price can potentially come up here. So for now, I don't have any sell. I might have a sell only if we get a retracement back up. I might consider a sell, but for now, I do not have anything solid. And also with this week, you can see this is just a liquidity grab. So price can even retrace all the way up to the 50 EMA before we even get sells. Maybe we might get sells here. So C1000 for today, I do not have anything solid. As you can see from the price action I'm looking at, I don't have anything solid. So I don't think I'll participate in this market. The levels which I would pay attention to though would be this low. And up here, I don't really see liquidity, any liquidity grab, which is too clean, meaning this price can retrace all the way up to this price level here, which is around 58, 55. Okay, so that's my point of interest. If I'm to sell this, I'd rather wait to get a reaction here. maybe see how they react around today's high at the 50 EMA. So as soon as they extend today's high here, I just want to see how they'll act, because maybe they might still come down, then push up. So I would say this is a point of interest, point of interest, point of interest, but nothing too solid there. Then going to be 1,000. I actually saw yesterday, I didn't pay much attention to it. I think it's because we had executed on C3. So we had a nice buy initially, which retraced, gave us a second impulsive move, which gave us a second buy in the early hours of today. So is the trend continuing to go up though? That's the question for now. So if the trend is going to continue going up, this area here where the price is would be our point of interest. So we're already trading within the 38, within the 50, almost on the 61, which is near the 50 EMA. TDI is almost totally above the 50, which will justify an uptrend. So let's check the weekly, see where our price is being delivered. So on the weekly, we rejected the 13 EMA the week before last. Last week, we pushed up a little bit, and this week, we're looking for a potential push to the upside, which will see our price come up to this area here. So that's a potential target if we were to go up. Looking at the daily for more bias, we are trading above the 13 EMA. We haven't had any good bullish day. Even though the buys have been there, you can see there have been a lot of weeks. So there's a lot of traps happening in there. But again, price can still be bullish. So our bias is still bullish. We're about the 13 EMA. So we are looking for reasons to buy. Dropping down to H4. Impulsive move. Order block, which looks like it's been tapped into. Right, steady pushing up, but with the huge deep retracement. So we've got the push up, deep retracement, push up, deep retracement, push up, deep retracement, push up, deep retracement, push up, deep retracement. So I usually don't like trading these markets because it's hard to hold. You're not sure whether the price wants to continue or it wants to come back, take you out and break even. So I'll still want to wait and get more confluences. But however, I'm leaning on buys. Right, so if you go to H1, you also notice H1 has got its own demand zone, which is this particular candle. So remember, this one is from a higher time frame. This one is from H1. So this is a zone within a zone. So this price can trickle back down as low as this area, which is valid because we see we've been having deep retracements. So if we can come down here and get a retracement or a reversal candle, then I would consider taking a buy. So the only thing I want to wait for here would be a reversal candle. So I'm looking for any type of rejection, doji, pin bar, bullish engulfing for me to actually consider a buy. At the same time, I can confidently run a fib. And you notice that if they do come to this area here, they will be still in the optimal trade entry area, which is still valid for a buy, and I'll just be targeting these equal highs here. So for now, this looks like it could potentially play out. At the same time, they might just respect this top area from the H4 demand zone or order block. So we'll just keep an eye on B1 because it's the only one which looks like it can potentially play out. So rounding up this session, V2501S. Okay, this was a sell we had yesterday. They retraced after this impulsive move. So usually I like to catch the first setup I get after I mark is the one I want to catch. Anything which comes after that, that's when you get manipulation or price just going sideways, basically. So rather opt for the best first setup which you get and actually aim to trade that one. So looking at the daily, you notice that we've hit a zone. I'm not sure where we had marked this red line from, but this is a reversal candle. The daily has come back above the 13. And remember, we're still trading within the weekly consolidation zone, which we marked a few days ago. So nothing is too solid on this one until we break outside this weekly range. So short term, in terms of short term, right now, it looks like we are bullish based on the daily. So can we get an entry to buy? Again, there is no proper retracements, explosive push up, small retracement, explosive push up, sideways movement, explosive push up. So this one I would rather wait out. Right now I want to see how they will respect this particular area. If they get here, and I also want to see if they might come up and take out liquidity here before they potentially sell. So for now, I do not have anything to trade or anything tradable on V2501S. I only have these 2 points of interest just to follow to see how price reacts with them. Then going to step after we got our trades, what happened with step? Started to go sideways. So until we break out of this sideways range, I don't have anything solid as well. So that's it for me today. If you've got questions, I think I'm only left with 2 minutes in this session. So I'm not sure if you've got questions, but you can still ask on Telegram, then I'll respond. So step, I'll only look for trades when they get outside this range which they are currently in, because for now there's no direction there. For the past 2.5 days, there's no clean direction. So my only setup for today will be stoking C5, because you see it looks like it's respecting the order block here, and I'll also be stoking on B1000. Those are my only assets which I'll be focusing on today. So I'll just leave these two like this so that I can track price. You can see also B1 looks like it's respecting this. So if we jump to M15, I can consider a buy if I break this high here. Why I'm using this level is because I already have a low here, which I would consider a peak within this intraday move. This would be my order block area. Price broke, came back, retested. This looks like it's a flip zone because this is yesterday's high. So if price breaks above 13,990, I'm buying B1, and I'll just be looking for a short-term buy there. If I can get 30 to 40 pips, that will still be perfect. C5, I'm looking for price to actually move away from this area. Then I'll look for a retest of the order block, then I'll sell. So those are my two setups for the day. And if I have any other views, I'll let you know. But for now, this is only the only assets I'm looking at. So yeah, we're out of time now. So just let me know if you've got any questions. Then if you're watching this on YouTube, don't forget to comment, like, and subscribe. Thank you so much for your time. Good trading.